Hi there, welcome to Kneppy Invest. Another trading week has come and gone of my favorite month of the year. And when I say my favorite month of the year, I'm talking as an investor. August by far is my favorite month, closely followed, maybe not closely followed because I was contradicting myself there because I said by far it's my favorite month and then I said closely followed. So it goes August, February, and then equally January, April, July, and October all come in third place. And the reason those are my favorite months of the year is because we do see companies release their results. We see how companies are performing, and this week is no different. However, particularly in the first 3 or 4 trading days, the majority of companies releasing their results were boring companies like CBA, Suncorp, QBE, Boral, although Boral's share price did go bonkers after release of their results. So maybe I'll have a look at Boral. Now, there were a few other interesting announcements released during the week. We saw a few trading updates and such like that. You have to decide whether I will do standalone videos on some of these companies because on Friday, today, 11th of August, we saw quite a few companies I am interested in releasing their results. REA Group, Scali, Baby Bunting. On the previous day, the Thursday, we saw Cettire release their results, and they were interesting. So potential, I will do standalone videos on some of the more interesting financial year results, and I have yet to decide that. So I might talk about some of these companies in this video and then do a standalone video. So I'm not going to do or talk about tweets or anything like that, just because there's quite a few companies I want to talk about in this video. Now, before we have a look at any results, I'm going to go back to the start of the week, because there was one company that I want to have or talk about, and that's Lithium Australia, probably the most vanilla named company on the ASX. And obviously, this company is all about lithium, exploring more than likely lithium based in Australia without even knowing anything about this company. Now, 99.999999% of companies IPOing on the ASX right now are lithium-based companies. So there's a plethora of lithium companies on the ASX, not a shortage at all, which does sort of scare me about the future of lithium companies well down the line. I'm talking about 5+ years, because if just a few of these companies find a really good lithium deposit and go to production, we are going to see eventually a massive oversupply of lithium. But the reason the market got excited about Lithium Australia this week was because of a landmark joint development agreement with Mineral Resources, and the market loved it. In fact, the share price was up 100% on the announcement, and on the Monday finished, the share price closed up 67%. A little bit of volatility in the share price, and the main reason I want to talk about Lithium Australia is not the announcement itself. It's just the market reaction, where the share price is right now. So this is the hourly chart. So initial pretty good reaction from the market. We can see that good reaction from the share price increasing by 100% from 33 cents to a high of 66 cents on really strong volume. And then the share price pulled back from around the 60 to 65 cent range, or 6 to 6.5 cent range, down to around about 4.5, 4.8 cents on lowering volume. That's exactly what you want to see. As the share price pulls back, dips back, we want to see volume decrease. And eventually the volume is really low, which tells us those who want to take their profits have more than likely sold out. And that means there's a better chance that the share price will bounce from here, move up forward, move possibly higher than 6.6 cents. Now, no guarantee about that, because we need to see demand come back in for Lithium Australia shares. And of course, there is no guarantee of that. But more than likely, you won't see much selling from now on, because those who want to sell, those who have sold out of Lithium Australia, more than likely have sold their shares in this company. And more than likely, the other thing is no more day traders, or very little day traders in this company right now, unless we see the share price start to bounce on increasing volume, and then day traders will come back. So I have no interest in Lithium Australia myself, but this does look interesting, just the way the chart looks at this point in time. Now, there's another company I wanted to discuss, and they did not release an announcement this week. They, in fact, released an announcement the previous week, and I did not discuss. That company is Bcal Diagnostics, and there's been a lot of volatility in the shares of this company. In fact, since the 31st of July, we have seen the share price of this company rise or fall by double digits: 14.3%, 50%, 8.3%, 19%, 38.1%, 3.5%, 10.7%. The reason behind this volatility and increasing volume is an announcement they released on the 2nd of August. Breakthrough results, a major step towards commercialization. I'm really interested in these sort of announcements towards commercialization. Now, if you have a look at their Appendix 4C released on the 27th of July, this company has no receipts. So I don't consider Bcal Diagnostics, ticker BDX, to be a real company. They are not selling a product or service. So they are not getting any money into their business. And that's not a real company. So this is a step towards Bcal Diagnostics becoming a real company. Now, they did mention in their announcement they expect the first sales in the second half of calendar year 2024. So we're talking about 1 year from now. So that's still 1 year away. Now, what they do is breast cancer diagnostics tests. So hopefully this product they are doing, this test they are doing, is really beneficial, and hopefully it's really popular. But up until I see signs that this product, this diagnostic test, is well thought of, it's popular, and I see some proof that the cash receipts are coming in at pretty good levels, I'm going to stay clear of Bcal Diagnostics. I want to see that proof that this company can turn the potential of sales into cash receipts. I've seen plenty of companies have that promise, but they can just not sell that product to the market. Now, we'll talk about Lake Resources now, because it's been an interesting week for this company, just in terms of the share price movement. Share price has fallen a lot over the past 2 years. And in fact, the valuation of this company has gone from about 2 or 3 billion down to about 200, 300 million. They didn't release any really interesting announcements this week. They did get a query letter from the ASX. Share price plunged on that. They also presented at the 12th International Conference on Lithium on Thursday. They released that presentation on the Thursday, and for some reason, the market loved it. You just see that in the volatility of the share price this week, down 18.6% on the Monday, flat on the Tuesday, down 5.7% on the Wednesday, up 27.3% on the Thursday on increasing volume as well, and down 7.1% today on Friday, the 11th of August. So just have a look at the chart. Actually, I shouldn't have a look at the chart. Didn't have a look at the BDX chart, but that's okay. It's not the chart I was interested in. It was just the announcement itself. So let's have a look at Lake Resources. Is this a potential buy moving forward based off what we saw on the Thursday? And if we have a look, actually, we'll have a look at the daily chart first, because share price of this company is in a well-defined downtrend. It's been a downtrend for a while. Share price was got to a high of $2.63 in the middle, or towards the middle of 2022. Now it's 19.5 cents. Share price of this company, well-defined downtrend. We, on occasion, since the share price moved into a downtrend, have seen the share price go on nice short rallies. We saw that in May. Share price went from 41 cents to 66, 67 cents. So 50% increase in share price. So even though the share price increased 27% in 1 day, this is not a breakout in the share price of this company. This was just more than likely share price is oversold, or shares oversold, and some people saw maybe some value or expecting a bit of a bounce in the share price. You can definitely see that when we look at the 1 hour chart. This is not the end of the downtrend in this company just yet. And in fact, that increase in the share price on the Thursday was just in the first hour. So we saw the share price increase 27% in 1 hour, and the share price has pulled back on lowering volume. So no reason to get excited about Lake Resources right now. That's just my opinion. Now to the first of results, and this was not a financial year results. This was James Hardie releasing the first quarter results of financial year 24. Now, when you actually do look at the the results, like the profit, sales, doesn't look exciting. So sales down 5%, profit down 3%. So you might be expecting, share price should take a bit of a hit. You would be wrong if you thought the share price and the market didn't like these results. Share price rallied 14.4% on these results. So what caused the share price to rally 14.4% when sales are down, profits are down? So the thing you have to be aware of when a company releases their results is don't look at the results on face value. Compare the results to expectations That is the first very important thing. And then also look for any sort of guidance the company releases. So that is what drives the share price up or down when a company releases their financial results. It's whether the results beat or were short of expectations, and what sort of guidance has the company released. That's what drives the share price of a company, higher or low. So I'm not sure what caused James Hardie's share price to rise 14.4%. It could have been the results beat expectations. So the market was expecting worse results. The market was expecting sales to be significantly lower or profit to be significantly lower. So even though the profit and sales were down, maybe the market was expecting it to be more down. Or possibly the company released some positive expectations for financial year 24. I just don't know because I haven't had a look at the announcement. But we know just from the market reaction that the market liked what they saw. And if we have a look at the chart, we know the market has been fairly positive, James Hardie, for a while. And when I say while, we're talking about since the start of 2023. Share price of this company is in a beautiful uptrend, not only on the daily chart, but also the 1 hourly chart. A beautiful uptrend developing for James Hardie, not only for James Hardie, but also for some other building companies. Now, one of the reasons I think we are seeing excitement in this space, and even though it's sort of going against intuition that the real estate market's in trouble, maybe, particularly with real estate prices falling. But don't forget, in America, they have fixed mortgages. So people don't want to move. The reason people don't want to move is they have interest rates of 1% on their fixed mortgage, maybe not that low. And then if they move, buy another house, those interest rates are going to increase to 7%. So very little supply coming on the market. So there's very little supply coming on the market. What's happening? There is a lot of houses being built in America right now, which means they need the services of James Hardie or Boral, all these other companies, because they are building houses. In fact, the housing building sector in America has been going gangbusters for about a year because it's actually very bullish right now. Well, it's been bullish for the past year, but I think there is signs that that bullishness is coming to an end. And if we do have a look at the 1 hourly chart for James Hardie, this actually looks quite positive. So even though share price did increase on the day, up 40%, there's no selling coming in. Share price is going sideways, sort of consolidating right now. And that's a good sign moving forward. It's telling us there's enough demand for James Hardie shares to meet the supply, to meet those shareholders who are taking their profits because of this rise. And if those profit takers sort of, whittle away, they fade away, and if the demand remains there for James Hardie shares, that's when the share price of James Hardie will start to go higher from here. Now, the last time the shares for James Hardie were this high was about 1.5 years ago. So for some reason, this is really slow. So we're talking about the start of 2022. And just before that, we did see the share price of James Hardie get to a high of $58. So not much to go from here before James Hardie gets to those prices. So still talking about 25% rise. And I do think there is potential. James Hardie share price could get above $58, could get to $60. Who knows? Now, the other companies I've mentioned here, Janison, I'm not going to talk about Janison because market sort of initially reacted well to Janison, but then fell away. But Myer did not release their results. They released their results out of kilter with the rest of the market. In fact, I can tell you when they released their half-year results was in March. So they should release their full-year results in September. So a little bit out of kilter with the rest of the market. But they did release a trading update for financial year 23. Now, if you did watch my last week's weekly update video, I went through ABS, Australian Bureau of Statistics, retail sales, and department store retail sales have plummeted in the past month. So I was very interested to read the trading update for Myer. It sounded okay. It wasn't overly bearish, so it was a little bit better than I expected. But how did the market react to these results? So this is what I wanted to see, how the market reacted. And of course, what did I put the ticker code? I've already at the site. So share price down 14.1% on the day. So initially the market didn't like these results. But notice what the market has done in the last 2 trading days. When I say last 2, I'm talking about Wednesday and Thursday. So they released this announcement on the Tuesday. Share price has rallied 4% and then 6% the next 2 trading days. The share price has almost got back to the level it was before they released this trading update. You can definitely see that when we look at the chart. So initially there was a bad reaction, and then that negative or negativity turned to more positivity. So there was a little bit of buying coming in. So there was potential that this selling was caused, initial selling was just retail investors getting a little bit nervous about the results. Can't really see it in the daily chart. So let's turn our attention to the daily chart. Really big volume coming in. So just look at that volatility the last few days. So the selling was really in that first hour. It continued up until the start of trading on Wednesday. Share price actually did fall on Wednesday, but then recovered really nicely and actually has gone a fair bit higher. In fact, the share price of Myer has gone from 59 cents up to 68 cents. So a nice, what was that? It's not quite, about 15% rise in share price in a short period of time. And the share price has gone back up to the levels it was prior to this trading update. So I think those people or investors who initially reacted negative to this announcement and sold on the Tuesday or Wednesday may be regretting the decision right now. Or maybe you could say they overreacted. Now on to CRN, Coronado Global Resources. This company released their half-year results on the Tuesday. Share price went down 11.6%. But just like Myer, we have seen a recovery in the share price. So the share price went from $1.65 down to $1.46 and is now back up to $1.62, almost back up to the level where it was prior to the announcement or the release of their results. So let's have a look at the chart. Not even have a look at their results. More than likely, they were initially negative. And again, just like Myer, initial really negative reaction in the first 2 hours of trading, share price down 7.9% in the first hour, and then 5.6% in the next hour on pretty big volume. And the share price has bounced beautifully. No interest in Coronado, whatever called Global. I'm pretty sure they're coal. Let's have a look. International producer of met coal, metallurgical coal. Yes. So didn't even have a look at the results, but if you like coal, maybe this is the company for you. It's up to you to decide, not me. What else we got? CBA. Not even going to discuss CBA. Maybe we'll just have a look at the chart for nice. The one thing I will talk about in regards to CBA is some of the criticism I have seen about their profits. Record profits. How dare they have record profits? This is a publicly listed company. The management, the whole purpose of them managing this company is to increase their profits for their shareholders over time. They have done that. So they have been successful. So all this criticism about the record profits for the banks is unjustified. We live in a capitalistic society, and that's the whole point of these sort of companies, is to increase their profits for their shareholders. So I will never criticize any company for having record profits, even if it's the banks, even if it's Woolworths and Coles, when they're profit gouging, that sort of thing. That's the whole point of the society we live in. And if what they've been doing is not beneficial for society and the economy, they will suffer just like we will suffer. And they will have to decrease their prices or stuff like that. Maybe not Woolworths and Coles, or maybe they will have to decrease their prices. Anyway, to be honest with you, Commonwealth Bank shares, this is the only bank among the major 4 banks I will ever take a long-term position in. But even then, I mean, they were saying this is a record profit, and the last time the profits were this high was back in 2017, so 6 years ago. So it's nothing to get too excited about. I think that's right. Let's have a look. We can see this just by going to ComSec. Yeah, so this is the earnings. So 2018. So we saw a dip in earnings 2019, 20, 21, 22. Now it's back up to those earnings we saw, just past those earnings we saw in 2018. This is exactly what companies are supposed to do: increase their earnings, increase their profit for shareholders. Any sort of criticism I am going to completely ignore and understand that they have no idea on how this society, this economy should work. So anyway, CBA is a fairly boring company. I'm not interested in CBA. There's another company called RBD, Restaurant Brands, very liquidly traded. We know it's liquidly traded just by buyers and sellers. And if you look at the trade history, there's long periods of times where there's no trades in this company. You notice the share price has taken a bit of a dip. Look at these shares volume. There's on occasion only one share is traded on a daily basis. In fact, the majority of days, only one share is traded. This is definitely not a company to even do any research on just because of the liquidity. They did release guidance update and second quarter sales results, and it was not that positive. I'm pretty sure this company owns KFCs. Pretty sure it's New Zealand based. Yeah, it's New Zealand based. But they own, KFCs and that sort of thing in some places. But anyway, I'm not even sure why I'm talking about restaurant brands in New Zealand because I would never buy it just because of liquidity. Suncorp, share price down. Results were really good. This is another. I was not going to talk about Suncorp, but when you open up and I look at the results announcement or the media announcements, when you just look at the numbers, they look pretty impressive. So profit up 681 million, cash earnings up that's previous corresponding. Why don't I put how much it's up? Jeez. Where's the percentage up? Doesn't say any percentage up. Oh, geez, Suncorp. Make sure your media release is better than that. Here we go. Talking about percentages up. Here we go. Net profit after tax. This is exactly what I wanted. $1.148 billion, up 68.6%. Cash earnings up 86.3%. So straight away, when you look at the profit and earnings increases, you might think, wow, what amazing results. The share price should have roared higher. So what did the share price do? It decreased. Why did it decrease? More than likely, the numbers did not meet market expectations, or possibly, again, the outlook from the company was not positive. Although when you look at the share price of the chart, share price is in a beautiful, well, I wouldn't say beautiful, but a nice uptrend. And last time share price was at these levels, although share price has pulled back a little bit, it was not that long ago. It's just prior to COVID-19. This is not a company I would ever take a long-term position in. Just look at the long-term chart. Really, it's done nothing. In fact, yes. In fact, if you go back to 2007, share price was higher than it is now. So why would you take a long-term position in a company with a chart like this? Same thing with QBE. They also released their results. I'm not going to talk about QBE, but just like Suncorp, their bottom line results were really good. But if you look at the chart, this is, again, the weekly chart. For some reason, my system's really slow. Look at, why'd you buy this? Chart was in a long-term downtrend all the way from 2007 to 2021. It does look like maybe the trend in the share price, if you look at the weekly chart, is moving in an uptrend. But share price has been significantly higher than this in the past. And this is a telltale sign of a non-high quality company or a low quality company. So we won't discuss QBE. The only reason I would buy Suncorp or QBE is just to ride the trend, the momentum of the share price going higher up. Onto Boral. These results were pretty good again on the surface, and the market reacted pretty well to these results. Share price up 8.5%, a further 4.6% on the Friday. Again, I'll have a look at the announcement. We'll have a look at the bottom line results. I'm hoping their Appendix 4E, which is only 3 pages long, have the numbers here. Yep, that's good. So revenue up 17.1%, profit up 106.3%, net profit up or down 84.6%. More than likely, there's some significant items there. Net profit before significant items from continuing operations up 304.2%. Net tangible asset backing up from $1.66 to $1.77. So the market really like these results. And again, this is a building company. I think they sell concrete, something like that. And just like James Hardie, this is a nice looking chart. If we turn our attention to daily chart, and hopefully, beautiful chart. Look at that beautiful uptrend in the share price. In fact, the share price has gone past the highs we saw back in 2021. So we are talking about a long-term high for. No, this is the wrong company. Jeez. That was a company called Top Build Corporation, which is probably a building company as well. Okay, this is better. Oh, why is it so slow? So this is still a bullish looking chart. And the share price in an uptrend. Last time the share price was this high was around the time when the share price took a massive drop start of 2022. So there's one day in 2022 when the share price of Boral fell 41.8%. That might have been, I can tell you right now, was that a sort of some sort of capital give back, what do you call it? Capital return to the shareholders. So what I'm going to do is do it adjusted. So this takes into account dividends, and yeah, it was a capital gain or capital give back to their. There's some word for it. So it's very important to understand that even if you do see the share price drop like 41%, there could be some reasons other than a bad announcement. And if you do take that into account, the share price is quite a bit higher than has been in the past. So if you look at the weekly chart for Boral, the last time the share price was this high, maybe never. So we're talking about an all-time high share price for Boral if we take into account that capital return, that's the word I want to look at. So a really good-looking chart for Boral. And yeah, 2 big up days in a row. I was thinking about taking a position in Boral at the start of trading on the 11th. I decided not to. I just wanted to see what the share price did today. And maybe that was a little bit of a mistake. Maybe I should have taken a position on open this morning just because a really bullish looking chart for Boral. Australian Alliance Aviation. Chart for this company looks pretty good. Their results were, I suppose I'd call these results okay. No, here we go. Results announcements, they're okay. I have no problem with this company. Statutory profit before tax 52 million. Last year was a loss of 7 million. Total revenue up 147.8 million. Underlying operating cash flow of 55.9 million, down from 91.8 million. So it's a little bit of possible red flag, but nice chart here for Alliance Aviation. And if we actually just put a bit of a line here, because that's the highs we saw back in July, share price is trying to get above those highs we saw in July. And if it does get above those levels, that's a nice bullish chart for Alliance Aviation. Next company I want to talk about is, I've already talked about QBE. There's a REIT called ARF, which Arena REIT. I haven't looked at those results at all, so I'll leave that. Now on to Cettire, which I might do a standalone video on this company. Share price up 5.4%. But it's really interesting happenings. They released their results on the Thursday. Share price responded really well. And then they released an announcement this morning, sales of shares statement. So the CEO or founder has sold out a lot of shares. We're talking about 33.3 million shares, which represents 8.7% of the issued capital. And I was expecting more of a negative market reaction, but instead the share price rose 5.4%. I have taken a trading position in this company. The main reason I think the results were really good, share price had pulled back from a significant run. So we're talking about revenue up 98%. Company is now profitable. In fact, $16 million of profit in the year. Now, the one thing I didn't have a look at was cash flow, that sort of thing. So I am trading this, but the main reason is just the market sentiment. And there is potential that the share price of this company could go significantly higher from where it is now. So if we look at the daily chart, so slow. So this chart does look really good, a beautiful uptrend. And we saw the share price really rally really strong in June, July. Share price went from about $2 up to $3.60 in a fairly short period of time. And when you see a share price rally like this, you need to see a little bit of pullback in the share price. And that's exactly what happened. It's very healthy. And then we have seen the share price starting to go higher. I'd like to see the share price get above about $3.80. I'd like to see the share price get to a new high. And I think if it can, it could keep on going, particularly because now Cettire is profitable. A very impressive increase in revenue as well. And that's why the market is excited. One thing I'm worried about is the market capitalization, $1.2 billion. So this company has to achieve very big things to justify that sort of market cap. So we'll do a standalone video on Cettire, go a little more in-depth in their results. I'll also look at the cash flow. That's the other thing I'll look at. Company who did not release their results, AUB Group, did provide guidance upgrade. This is exactly what I'm waiting for, a profit upgrade. So as you would expect, actually we'll open up and have a look at it first. As you would expect, so the previous guidance for underlying net profit after tax was for it to be between 120 and 124 million. Now they expect that to be 129 million, which is a nice increase from previous guidance. So as you would expect, the market should react really well to that, up 6.3%. I probably would have expected it to be a little bit better than that, because when you look at the chart, it wasn't that long ago when the share price was higher than it is now. And I would have expected the share price to get above about $29.50. In fact, I wouldn't have been surprised to see the share price get to $30. So a potential nice little cheeky buy of AUB Group, share price in a beautiful uptrend as well, to justify the profit upgrade. Now on to AGL. I'm not going to have a look at their results. I think sort of a negative outlook, a perceived negative outlook, has seen the share price take a little bit of a dip after a beautiful run up in the share price. This is a really strong run up, but the share price did decrease 3.1% and then a further 0.6%, but not large volume and not a significant market reaction, but probably a little bit disappointing to the market. So I won't go into depth with that. Company called LNW. I've never heard of this company, Light and Wonder. So it looks like it's a dual listing. When you look at the daily chart, not a lot of liquidity, but share price is in an uptrend. Share price has increased from $91 to $114.4. So I'm going to do a little bit of research on this company, but I won't talk about Light and Wonder in today's video. Now on to a few companies that I was really looking forward to seeing their results. First one was REA Group. Now remember what I said, start this video, don't look at the numbers on face value and think these are really good results or these are really bad results. This is a perfect example of a company that when you look at the underlying numbers, they look pretty bad. So what do I mean by pretty bad? So this is a growth company. So with a growth company, you expect profits, revenue to be increasing year on year. Revenue only up 1%, EBITDA down 3%, profit down 9%, earnings per share down 9%, 4-year dividend down 4%. But what happened to the share price? Up 0.4%. A fair bit of volatility in the day. So why wasn't there a market sell-off? Well, this was to market expectations. And we know it's to market expectations because the share price didn't move at all. And the other thing is, I do think that the market is really forward-looking to this company. And REA Group is a bit of a cult stock as well. This is a highly beloved company on the ASX. And even when the company does release perceived, maybe not perceived, but numbers that look disappointing, there will be participants in the market who will prop up the share price because, well, it's REA Group. This is a growth company. And there are a few reasons I like this company moving forward. I am a shareholder. In fact, this was at one point in time my longest shareholding. I held it for over 10 years and then I took profits, but I have bought back in. Anyway, and the chart looks really good for REA Group as well. Let's not ignore the chart. A beautiful looking chart. There it is, the daily chart. Beautiful. It's moved into an uptrend since March. Last time share price was this high was probably 2 years ago. Was, yeah, early 2022, so about 18 months ago. Anyway, now on to KPG. I'm not going to do a standalone video on this company, but there's one thing I liked when I looked at their presentation. Share price down 2.9%. So it's not the results as per se. It was just something they mentioned in their presentation, which I liked. And the reason I liked it is because they talked about return on invested capital. And that is one thing I look at when I am researching every company. And in fact, there it is. They do a whole slide on return on invested capital. So I do prefer return on invested capital over return on equity. And the reason is because return on invested capital takes into account the debt. So invested capital is debt plus equity. So in my opinion, you always should include debt. So return on invested capital for this company is 20%. It has fallen a little bit over the past few years. So it has been above 20% over the last 6 years. So that's the sort of number I am looking for, 20%. This is not the sort of company I would invest in It's sort of like a roll-up company, a services company, or I should say a professional services company, an accounting company. I will not invest in accounting companies, law companies, that sort of thing. But this company has done really well over the past few years. Look at that chart. They also issue, is it monthly dividends or something ridiculous like that? In fact, I can tell you right now, maybe not monthly, bi-monthly, maybe. Yeah, this company releases monthly dividends. So if you like dividends coming in every month, this may be the company for you. Chart going sideways over the past year or so, but the share price was in a beautiful uptrend prior to that. Beautiful uptrend. So a nice little consolidation period for Kelly Partners Group. Next company, Nick Scali. Oh, the hero of the day. Maybe I'll leave Nick Scali to last. I was going to talk about VVA or Viva. Just want to see the reaction from the market with Viva Leisure, up 11.5%. Maybe I should talk about Viva Leisure because this company chart was going sideways. The share price was just going sideways for a long period of time. And now maybe this is a breakout. This could be a breakout for Viva Leisure. Again, not the sort of company, not the business model I like. Look at that. This could be the definition of a breakout. So I'm going to put this company onto my watch list. Not the sort of company I'll own for the long term, but beautiful reaction from the market. Nice volume, but the volume has been pretty low. So let's have a look at the announcement, the numbers. If I remember correctly, I did look at this very quickly. So revenue up 55.4%, EBITDA margin 20.7%, profit 30.4 million, significant swing from a loss of $12 million last year. So it looks like things have improved, strong balance sheet, blah, blah, blah. So this company owns gyms, that sort of thing, if I remember correctly. About Viva Leisure, operates health clubs, gymnasiums. So yeah, I'm not sure if I really like that business model, but the market liked the announcement today. Another company I was going to talk about was, I was going to say National Weather Service, but News Corporation. So National Weather Service is the American Meteorological Service. And share price up 2.6%. They released their full-year results. Fourth quarter earnings release. Don't care about this company, a low-quality company. Avita Medical did release their quarter results or half-year results. Share price up 4.6%. The volatility in the share price of this company has been insane. Insane volatility, unlike Viva Leisure, whatever it's called. But the share price has been in an uptrend. I wish I bought this dip in May. Nice dip. The share price has gone higher. Yeah, this is a beautiful looking chart. Why didn't I take a position in? And then let's have a look at Baby Bunting. So 3 companies to go. Next Scali, Baby Bunting, and then Star Entertainment Group. Star Entertainment Group did not release half-year results, but Baby Bunting did. Full-year results, I mean. Share price down 1.9%. Now, I'm not going to talk about the results because, again, on the surface, these look pretty dismal. Sales up 1.7%, but gross margins down to 37.4%, down 118 basis points. Profit down 51%. Statutory pro forma profit down 51%. Statutory profit down 49.5%. So you might have expected a more negative reaction from the market, and there was, of course. Let's have a look at the daily chart. Actually, we'll look at the 1 hourly chart because that's where you see that initial negative reaction from the market, and that initial negative reaction from the market was wrong. So share price of this company in an uptrend based off the 1 hourly chart. So when they release their results in the first hour, in fact, we're going to have to go shorter because that initial reaction, negative reaction, didn't last very long. So in the first 5 minutes, share price of this company was down 8%. It might have been even down more than that because in the second, in fact, if we go 15 minutes, we might be able to see it. Share price was as low as $1. It was $1.91 and a beautiful, nice little recovery. In fact, the share price at one point in the day was up, and then there was a little bit of selling late in the day. But overall, based off the market reaction, the initial market reaction was negative, but that was wrong, in my opinion, based off how the market reacted during the rest of the day. So you've got to be careful that your first reaction to results may be wrong. So I never like to react initially on open to results. Sometimes I do. But you just see the fairly volatile market reaction today. Some good volume coming in. Downtrend, the share price has not been broken, still up. So Baby Bunting, on surface, results look pretty bad. Profit down big, but the market expected it. But there was a lot of volatility. So the market was initially unsure. Probably retail investors who didn't realize these results were to expectation. They already hinted at these results in a previous announcement. And possibly some retail investors didn't know the market was, or the company had hinted these results. They saw the numbers and went, oh my God, these results are terrible. I have to sell. And they got caught out and sold within the first 15 minutes, which you shouldn't do, in my opinion. Sometimes I do it. We'll talk about Star. No, we'll talk about Nick Scali, because Star was probably the star performer of the day. Nick Scali up 13.3%. This, I had to step back when I am a shareholder of this company. So I was really looking forward to seeing how this company performed. So revenue up 15%, profit after tax up 26%, EBITDA up 21%, EBIT up 24%, dividend flat, total dividends per share up 7.1%. Now, so I think, yeah, the final results look good, but they did break down the revenue for this half year compared to the previous half year, and it was down a fair bit from the previous half year. So even though the market has reacted really well to these results, there is some slight negativity in the results themselves. However, in saying that, profit after tax of $100 million. Now, the market cap of this company was $854 million. So the P/E ratio of Nick Scali is about 8.5 based off the share price it was before the release of these results. So there is potential that there are some value investors coming in going, wow, what amazing value for a company that increased their profit by over 20%. The chart looks really good as well. So the chart looks pretty amazing. We'll have a look at the daily chart first. Well, look at that beautiful hourly chart. So the daily chart has, the sentiment in this company has just shifted from negative to positive really quickly. And share price has gone above the highs we saw back in February of this year, where we did see the share price plunge on the release of the half-year results. Share price decreased 13% on that day. Now the share price is above those levels. So if you sold out then, unfortunately, the share price has gone higher. Is now back up above those levels. There has been a lot of negative commentary about this company. This is going to be one of the companies that is going to suffer because of the economy, because they sell furniture, that sort of thing. And maybe the market is right now thinking they're wrong. Pretty good volume coming in. Return on equity of this company is 50%. That's one thing I want to point out. 50%. Now, we'll have to open up the annual report. So, how do I know it's 50% without looking at anything? Well, all we can do is, and this is not return on invested capital, so all we have to do is go to equity, total equity, say 180 million, right? 180 million, that's equity. Return on equity is the profit over equity. So what's their profit? 101 million? 101 million. So 101 million divided by 180, that's more than 50%. So that's a very impressive return on equity. Return on invested capital is going to be a little bit less than that because they do have a fair bit of borrowings. Well, maybe not a fair bit, $90 million of borrowings. So if you add that to equity, you got 260 million. So return on equity would be quite a bit lower than 50%. So we're talking about 101 divided by 260. So we're talking about 35, 40%. So fair bit less than 50%, but still, return on equity, return on invested capital are very impressive for this company. One of the best return on equities and return on invested capital you can see for a retail company. So that's one of the reasons I would define Nick Scali as one of the highest quality retail companies on the ASX, just based off those two metrics. And revenue has grown very impressively over the past 10 years as well. Can they continue that over the next decade? Definitely. And that is why I'm a shareholder of this company. Now on to the last company I'm going to mention in today's video, Star Entertainment Group, a dog stock, if ever there was one. Share price up 18%. Why? They didn't release any results, but they did release an announcement saying New South Wales casino duty rates update. So we already know this is going to be positive. So this is just saying that the proposed duty increase was not sustainable. This is the Star saying to the former Treasurer. Flawed in its design and if implemented as originally proposed, would significantly challenge the economic viability of the Star's Sydney business. And this is why, well, one of the reasons why the share price of this company has plunged. And then today, the Star announced it has reached an in-principle agreement with the New South Wales Treasurer, whatever his name is, Daniel Mookie, to amend its duty arrangements with the state. So I didn't go further into this announcement. I just saw that and I went, this is positive. The market should react really well to this announcement, and it did. Share price up 17%. Potentially, we could see the share price rally even further than it is right now, because a lot of negative sentiment in this company has driven the share price of Star Entertainment Group all the way down from, all the way down from $4 back in late 2021, all the way down to less than $1. It was below $1 the last two trading days before this announcement, but just look where the share price is right now. It is still in a downtrend because the share price has just taken absolute hammering over the past year. So 1 year ago, the share price of this company was $2.50. Will the share price get back up to those levels? Well, a lot of headwinds for this company, and possibly this is the first sign of those headwinds coming to an end. So I actually have taken a sneaky trading position in this company, thinking maybe this could be the start of a potential upswing in the share price. My only fear when it comes to Star Entertainment Group is the amount of shareholders who have bought in at higher prices in the past. That's a lot of resistance moving forward. And hopefully there's going to be enough demand for shares to drive the share price gradually upwards over the next year or so. And then the share price can move into an uptrend. So that's all I have for today's video. Pretty sure that's all I wanted to cover. So some of these companies I probably will do standalone videos of. Short 4-minute standalone videos. Scali, REA Group, Cettire, maybe Baby Bunting, maybe Boral. I haven't decided just yet. If you have any thoughts about that, I'd love to hear your opinion, your thoughts. If you think it's a bad idea, you can leave that in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.